GM, ladies and gentlemen, I thought I would just quickly make a video for you guys and make you understand how to figure out when to sit out and how to figure out when to go ahead and trade. So the very first step is obviously having a bias, which I think I've talked to you before earlier. कि आपका एक bias होना चाहिए. You should have a bias whether you're going to go long or whether you're going to go short, and that bias should directly be inspired from the structure that the market is making. So if the market is making a higher high and higher low, then that is obviously an uptrend bias, and vice versa. So let me make you understand today why I decided to sit out. So if you look at what is going on in gold, gold on the daily time frame is forming a higher high and higher low structure, while it formed a higher low, but it failed to form a higher high, right? And then from here the price came down. Now this is obviously a very early sign of a trend reversal, but it could be too early to say that gold might do this, because it could also be forming a structure like this to break out further. So that's why this is a sign of a reversal, but this is not a confirmation of a reversal. A confirmation of a reversal would be a lower high and lower low like this, which obviously hasn't formed yet. But if you look at this on the, let's go to the daily time frame. So you can clearly see that there was a support region right here, which gold has been respecting, right? If you go to the 4-hour time frame, you will see that gold is sitting exactly at that particular support region. So obviously we know that the price is supposed to go down with the given trend. We are supposed to short gold, but gold is sitting at a support region on the daily time frame, and that is exactly why multiple time frame analysis is so important, that you look at multiple time frames to develop a bias, right? For the beginners out there. So now going short when support breaks this one, it doesn't make sense, because gold is probably going to reverse from here again, right? So going short definitely doesn't make sense over here. Now let's say if you are an experienced trader, one more important thing I want to make you understand is that gold has traveled from a very long distance to this support region, and I've said this many times before, that whenever gold travels to a certain level or to a certain zone from a very far off distance, it always bounces back whenever it hits a resistance or a support. So let me give you an example. Let me give you a real life example. So let's say this is a wall, and you throw a ball, okay, from far off with a lot of high power. If you throw it from here, there's a very high chance ball will hit the wall and bounce back like this, right? Ball will hit the wall, bounce back like this. But let's say you throw the ball from here. You throw the ball from here with equivalent power. Obviously, since the distance is less, you will obviously use very less power. So when you do this, the ball might just fall down like this. Now once again, this has two other components, the power and the distance. And same thing here, the power and the distance, basically the distance and the volume, right? The distance and the volume. So the volume is obviously very high, the distance is high. That basically means the most likely the price is going to bounce back, right? So from that perspective, from that angle, so if you were an experienced trader, I would advise you to go long, right? I would advise you to go long when, let's say, price goes to the, let's go to the 15-minute time frame, and let's say when the price breaks up this particular resistance. But the problem with going long in this scenario is that we don't know when the price might reverse, we don't know how to properly set the target, and we don't even know whether the price is actually going to continue higher or not. And that is why in this scenario, the best thing to do is to sit out and just watch and let the market do its thing. Because see, now you might think, you know what, I understand what Umar is saying, so I'm going to go ahead and go long. I am not going to go long, because eventually trading is all about taking the setups that you are 100% confident with. Does that mean you will win every time? Absolutely not. But that will definitely give you a very high accuracy rate, and that will definitely give you a very good comfort level, a very good confidence level, and obviously very, very good trades, which will increase your profitability as well. So when I know that the price is very interested in going lower, even though if it is breaking the structure here on the short time frame, I am not interested to go long. I would rather wait for the price to do something like this, and then when it forms a resistance here and breaks off this resistance later on, maybe the next day, this is where I'm interested in going short, because I know for a fact that I am going in sync with the higher time frame trend, and this is a plus setup. This is a setup that I am confident with, and that is exactly how you become profitable. So in short, avoid setups which are counter trend trade, which are obviously counter trend, and that don't give you 100% confidence. When you avoid them, you will minimize your losses to the maximum level. Your losses will be minimized, extremely minimized. And also, whenever you're struggling to find a bias, whenever you're struggling to develop a bias, like in this scenario, right? So the bias is obviously short, but once again, we are sitting at a daily time frame support, which doesn't make sense to short, doesn't make sense to go long as well, because we will be going against the trend. So when you're confused like this, the best thing to do is to sit out and not trade. When you sit out and not trade, you will get clarity. The market will give you clarity. The market is not running anywhere. The market is not going anywhere, my friends. So don't give in to the urge of trading. Okay, you need to understand that the market is here forever. It was here before you were born, and it is going to stay here after you die as well. So the market is going to outlive us, all of us. So the market is not going anywhere. You are going to get enough opportunities. So when you are very certain that this is not the best day to trade, just don't trade. And that is the key to becoming a profitable trader. One of the keys to becoming a profitable trader. So I thought I would just share this with you guys, so you can have a good understanding as to why I decided to sit out, and how to actually understand when to sit out and when to trade. So that's pretty much it, guys. I will see you guys tomorrow. Bye bye.